Welcome to today's session, and really what we want to do is I want you to avoid the 5 major mistakes that I see time and time again with alarming frequency. So here are those 5. Firstly, they don't measure their trading beyond the profit loss. It's not all about profit loss. It's about the decisions that you make that contribute to that on a sustained basis. So look at the decisions you're making. And we've talked about that in other sessions. And of course, look at the way you've entered. Look at the timing of the exits, as we've talked about in other sessions. So look at the decisions in detail. Mistake number 2 is they trade one strategy to cover all markets. It doesn't happen. There are markets which you will get slammed with. Your mission is to match strategy to markets, as those of you who have heard me for a while have heard me bang on about time and time again. That's why it's worth investing time in learning 5 or 6 strategies and knowing which market conditions suit these. Mistake number 3 is they focus their energies, efforts and time all on entry and forget exits. Remember, entry has the purpose solely of giving you a high probability that something is going to move in your direction. After that, it's all about exits. It's all about timing it right, about optimizing profit and keeping loss within a tolerable limit. Number 4 is that they fail to recognize how risk changes during the life of a trade. Let me give you an example. If we enter a spread trade and the maximum risk is our debit that we entered with, so let's say it's 20 cents, and our maximum reward is $1, and over the life of that trade we see it moving up towards 85 cents. Now the risk profile has completely changed on that trade. We're now our maximum gain from where we are right now is 15 cents. Our maximum loss is 85 cents. So the risk profile of that trade has completely changed. So you need to bear that in mind. And it's exactly the case if there's a clear resistance line above you, you've entered a bought call, see that resistance line as the maximum potential return you're going to get from this. So continually look at how the risk changes. Mistake number 5 is they don't give themselves permission not to trade. And what I mean by this is the times when you should not be trading, be it from a personal circumstance, be it from a market circumstance, you need to be in the best decision-making state you can be in. And we've talked about that before as well. So there's your 5 major mistakes. Now, because I'm a nice guy, here's a bonus one. Don't shortcut your learning. If you shortcut your learning, you'll shortcut your results. It's really that simple. The relationship is absolutely clear. So look at what you're doing now. How many of these are you falling into? Not because there's anything seriously wrong with you, but just because it happens. And every quarter you should be looking at these 5 things and deciding whether there's anything that you need to tighten up. That's all for today. We'll see you again soon.